What's good, everyone? Welcome back to the channel. Welcome back to another episode of Investing with Kevon. I have a jam-packed episode. I'm going to be delving into a topic which I think can kickstart your financial future, which is investing. I'm going to be talking about why you should be investing in 2024 and how this year is the perfect, opportune time for you to begin your investment journey if you haven't done so already. So it doesn't matter if you're a beginner or more seasoned and have been investing for a number of years. There is something for everybody in this video. And the reason I'm making this video is because I swear, like when I see people, like when I see friends and family that don't invest, I'm telling them about investing, I'm telling them about the stock market, the benefits of the stock market, and how you're basically building wealth for the long term, and you don't have to rely on the state pension, or you don't just have to rely on kind of one source of income when you retire. This is providing you the opportunity to have greater returns. And it literally baffles me that nobody listens. And I'm just like, yo, this is free game that I'm giving out. You know what I'm saying? This is free game that I'm giving. When they say that, oh, the rich is rich, the rich get richer, or, we'll always be in this position. I'm thinking, yo, like, I'm giving you information that will literally, make you think and see your finances and money in like a different light, and people still don't be listening, and it just doesn't make any sense to me. So I'm making these videos because I've learned a lot investing, I've learned a lot from trading, and I've seen my money grow. And I know if I continue on this trajectory, just like this chart, start down here, eventually I'm moving up, and I believe everyone can do the same thing. Like, we invest for the long term, we invest over a number of years. And so in this video, I'm going to be going into detail and basically giving more information about why you should invest. I'm going to be giving, there's some key economic indicators, I think is important that you need to kind of look at, which will kind of help and influence your investment decisions. I'm also going to be giving some stocks that I think, could kickstart your portfolio. Again, this is just, my personal opinion. It's not financial advice. So, do seek a financial advisor if you want to seek a financial advisor. As I said, this is just, my journey, my opinions, kind of what I think and how I've been investing and what's been working for me. It might not work for somebody else. It might, this is just the stock market. This is just how things are. Anyway, so, the platform that I use to invest, I'm going to be making videos about the platforms I use and platforms that you can use. But there's two that I really, really like. The first that I use as my main one is Trading 212, and that's where I have my ISA. So if you're from the UK, an ISA is an individual savings account where you're able to put 20,000 per tax year into an ISA tax-free, and that's free from capital gains, and that's free from income tax. And this is a cheat code to wealth that most people in the UK don't utilize, don't know about, and it just baffles me that people don't use it. So it's why I'm talking about this. It's why I'm making these videos, to hopefully, influence, inspire somebody to go and open up a stocks and shares ISA, because you're getting, if you're telling me you're putting money into an account and that money grows, let's say £5 or £10, just something crazy, 5 or 10, not even crazy, £5 or £10, and you don't have to pay any tax on it. Now imagine that money is growing over the long term. Now that £5, £10 is turning into thousands of pounds, and you still don't have to pay any capital gains or income tax on it, and you're still not using this account. Like, bro, like, seriously, come on, think about it. Anyway, so I use Trading 212 for my ISA, and the reason I use Trading 212 for my ISA is because I invest in not only individual stocks but ETFs. ETF stands for exchange traded funds. It's like a basket of stocks in one. For example, in the S&P 500, you have Apple, Microsoft, Google, Eli Lilly, JP Morgan, and various other stocks all in one, the S&P 500. And there's various different ETFs that you can invest into as well. And I think ETFs are safe, and that's the starting point that you should honestly be going with when you're a beginner investor. The other platform I use is called Vanguard. And Vanguard is a world-renowned platform that you can use. And I think about Vanguard as like a set it and forget it platform. So if you don't want to do individual stocks and you just want to have ETFs, Vanguard is a perfect place to start, right? So you can set up a direct debit with Vanguard to deposit X amount of money every single month, and they will invest that money for you. That's a hands-off approach. I'm more hands-on, and that's why I use Trading 212, because I can actually invest for myself every single month into a variety of different stocks. At some point, I will go into my portfolio and speak about the kind of stocks that I use, but this is the starting point for you and where you can start. So if you'd like a free share, there's a link in the bio. So check the description out. There's a link there to sign up, and we both get a free share from Trading 212. Unfortunately, Vanguard doesn't do any affiliate links or anything like that. So yeah, you can just go to the Vanguard website and sign up. All right, guys. So let's jump into some economic outlooks before we begin. I think looking at economics is the first thing to do when kind of investing. And so in 2024, what we're seeing are signs of recovery and growth after the challenges of the past. And the kind of challenges that I'm talking about is COVID-19. We saw what happened there with the markets, and also rising inflation. We saw very high inflation, actually. We saw numerous wars that has been happening and has happened. And so I think looking at the economics is the first thing to do. So from Goldman Sachs, they believe that the global economy will perform better than many expect in 2024. The US is on its final descent to a soft landing. The S&P 500 index is forecast to return 6% in 2024, which is very good for your money. And also some, key things to kind of look at as well. I mentioned inflation. We see that inflation will moderate further, meaning that inflation will kind of lower over the course of the year, we hope. And then we see growth in North America and Western Europe will fall short of its potential. Not very good, but I still have high hopes. Mainland China's economy will recover slowly, so I guess Chinese stocks are expected to grow. We forecast annual GDP growth in mainland China of 4.7% in 2024, which is down from an expected 5.4% in 2023. Another thing to pick from here is that the US dollar would depreciate. Not good for the US. The depreciation will be reinforced by a relatively slowing of both US real economic growth and inflation, as well as the overhang of current account deficit, which, as share of the US GDP is unsustainably high. The yen is expected to appreciate against the US dollar more strongly and many of its peers during 2024 in tandem with forecast divergence of monetary policy. I'm kind of just staying on kind of the dollar depreciating. It's kind of why having money in a bank account or just keeping cash there that's not doing anything is counterproductive. So for example, if you had 10,000 in 2006, over the course of the years, you can see that it has depreciated significantly, being 8,304 in 2011 and just below 7,500 in 2016. And it just basically shows you why it's important to kind of stay invested for the long term. So I wanted to kind of go into like a compound interest calculator. And this basically shows you the power of investing over the long term and kind of why you should be investing for the long term. So if we switch this to pounds, let's say you started with £1,000 today. The interest rates is for the stock market return is 10.26%. But let's be conservative and let's say it's going to return us 8% a year. And the minimum term that we kind of want to invest is 20 years. So if you're investing for 5 years, a short term, 10 years, kind of medium term, but we're investing over the long term. So we don't care about day-to-day fluctuations in the market. And then we're going to be say you just deposit £100 a month. And yeah, let's compound that and see where we get. So that leaves us with a future investment value of £63,000, which is very nice. You know, what you put in. This is the interest you've earned, 38,000, and you've deposited 24,000. So that is amazing returns on your money, and that's just with 1,000 investing, you know, £100 a month. If you put this up, you know, say you're doing 250, your returns is 152,000. Say you're doing 500 a month. You know, if you have that kind of money, now this is 300,000. You're investing, you're depositing 120,000, and the numbers they just become silly numbers, right? So you say you start with 5,000, you know, that's 631,000. You've deposited 240,000, you know, and just if you want to see a visual of what this looks like, you know, it's right here. You know, deposit 5,000 and then 500 a month over a 20-year period. You know, you see the money becomes crazy, right? The money becomes crazy, and it's why we invest for the long term. But let's go into some stocks that I think, you know, that could kickstart your portfolio. So this is the S&P 500. I really like this stock. The S&P 500 is the top 500 companies in the United States of America. So this has Apple, Microsoft, Google, Eli Lilly, JP Morgan, and various other stocks in this one basket. And that's what an ETF is, a collection of stocks in one basket, right? So this is one potential. The next one is Microsoft. You know, if you have an Xbox, Microsoft owns that. One of the best companies on the stock market, to be honest with you, and they have just been going stronger and stronger. And let's continue. Apple, again, another strong, you know, company, one of the best companies that I like to invest in. And you probably, you know, watching this on a Mac, you're probably watching this on your iPhone, you know, so why not invest in the companies that you already pay so much money to acquire their products? Why not invest in the companies as well? Another one is Amazon that I really, really like. Amazon is moving over to kind of healthcare, you know, AWS, which is the cloud that Amazon has. I think this is a very strong company, and it's going to be around for a very, very long time. So it's another one. So yes, guys, we've made it to the end of the video. Hope you've enjoyed the video. Just a couple of things to remember. Investing is not a get-rich-quick scheme. You know, it's a journey, and a journey that requires patience and discipline. And so starting in 2024, it gives you the advantage of time. If you haven't begun investing already, today is the day to begin investing. If you need more help on investing, drop a comment. If you've enjoyed the video, make sure you like it, make sure you subscribe it. Make sure you share it with your friends that don't want to listen when it comes to investing. Share it with everybody that, you know, wants to begin their investing journey. You know, this is where it starts. This is how we invest. I hope you've enjoyed, you know, the charts. You got to see a bit of how I invest, you know, things I look at, key economic indicators. Yeah, man, these are all, you know, good things, important things that you need to look at when it comes to investing. This is what I look at, you know. So yeah, thank you again. Make sure you like, subscribe, and I'll see you in the next one. Peace.